Okay, so Warren Buffett has been buying gold. And that is not a sentence I thought I'd ever be saying. Now, you've probably heard that Buffett has been buying gold, but what exactly does this mean for you? Does this mean that you should be buying gold? Is it smarter instead to buy the companies that mine gold? Or is the opportunity just already gone? Have you already missed your chance? So in this video, I'm going to break down my research on gold and try to help you to answer all of these questions for yourself. Now, of course, this video is not financial advice. I'm just a regular guy researching this stuff to really get my own head around things, and then I'm just sharing this research with you in the hopes that it really helps you to understand things better so you can make an educated decision for yourself. Okay, so let's get straight into it. So I've been a big fan of gold for some time. In fact, 3 of the past 4 videos that I've released have involved conclusions with me saying that I think gold looks set to outperform most other investments. So it would be really easy for me to sit here and say that Warren Buffett has bought gold and that means he's bullish, so I'm bullish and you should be bullish too. But the truth is it's a little bit more nuanced than that. And as much as I'm really excited about the world's largest investor investing into something that I've been talking about for months and months, my responsibility to you at the end of the day is to present you with both sides of the argument. So that's what I'm going to try to do in this video. I'm not going to be overly bullish or bearish. I'm going to try to present both sides of the argument. Okay, so despite all of the headlines, Buffett hasn't actually bought gold. Instead, he's purchased a 1.2% stake in Barrick Gold, the world's second largest gold miner. So he hasn't actually bought gold. He's bought shares in a company that mines gold. But what exactly is the difference? Well, when you buy gold, you're obviously just buying gold, which means the price goes up and down, and that's what's going to happen to your investment. Whereas with a gold mining company, you're betting on how well the company is going to perform and, of course, generate profits. But if you had to think about it for a second and take a guess, what do you think is the single largest driver of that company's profits? What changes it most of all? Well, of course, it's the price of gold. I mean, think about it for a second. If gold sells at $1,000 per ounce, and then over the course of the next few years, the price doubles to $2,000, well, the company who are pulling it out of the ground and selling it, they can obviously sell it at a much higher price. If they can do this, they can make more profit, and so the company becomes more valuable. So I think the first important distinction to make is that Warren Buffett has bought shares in a company, but also with such a strong link between the price of gold and the shares of the company. Let's just say you don't buy a gold mining company unless you're also a little bit bullish on gold as well. Okay, so great. Yet another investor is bullish in gold in 2020, but we have plenty of those. So what exactly is the big deal here? Well, the reason that this is such big news isn't just because Warren Buffett, as the CEO of Berkshire Hathaway, is the largest investor in the world. It's because he's also famously been very outspoken in his belief that gold is not a good investment. There's a clip that I'm going to share with you in a second, but before I do that, I'd just like to quickly say this video took a while to research, record, and edit. So if you do appreciate the work that went into this, remember to just smash the like button as it really helps with the YouTube algorithm. Anyway, here is that clip of Warren Buffett talking about gold.
If you buy an ounce of gold today and you hold it 100 years, you can go to it every day and you can coo to it and you can caress it and you can fondle it and 100 years from now you'll have 1 ounce of gold and it won't have done anything for you in between. If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do it all kinds of things. For 100 years, it'll produce things for you, and you still have 100 acres of farmland at the end of the 100 years. You could buy the Dow Jones Industrial Average for 66 at the start of 1900. Gold was then $20. At the end, it was 11,400, but you'd all gotten dividends for 100 years. So a productive asset of any kind, a decent productive asset, is going to kill a non-productive asset over time. Now, in any given 1-year period, 5-year period, any asset can outperform another asset. Incidentally, they're right to be afraid of paper money. I mean, they have their basic premise that paper money around the world is going to get worth less and less and less over time is absolutely correct.
But you just disagree with the investment theory beyond that.
Yeah, where they run from that, and they should run from it, is where, in my view, they make the mistake. But they have a correct basic premise. Mm-hmm.
So Buffett has often made the comment on gold that it is an unproductive asset. As he puts it, if you hold it for 100 years, you're still going to have your gold at the end of that time, but that's all you're going to have. It hasn't produced anything. So it seems kind of weird that he would invest into a company mining gold out of the earth. But let's try to be fair and neutral and point out that because Buffett has bought shares in the company, a company that pays dividends, and he hasn't bought gold directly, Buffett hasn't bought an unproductive asset. But then again, with the company's profits being determined in large part based on the value of gold, that unproductive asset, there is a clear link between the price of gold and Buffett's investments. Again, I don't know of any investor who really buys shares in a gold mining company that isn't also a little bit bullish on gold. So with this investment, Buffett appears to have done a U-turn and taken a positive stance on gold. Right? Well, again, like every situation in life, we have to really dig into the details to see the truth. Let's start with why he might have bought gold, and then we can run through the counter arguments. Well, gold is a store of value. It tends to hold its value and even grow in times of high inflation and when there is less certainty around the economy. Now, uncertainty around the economy, I think that one goes without saying, and we don't need to go into much detail there. But what about inflation? Well, I've spoken a lot about the Fed printing vast sums of money in previous videos, but we really all know about that. That's nothing new. What's really interesting is the question of when will they stop printing so much money? In a recent video entitled, "Is it too late to buy gold?" I made the point that the Fed have a really difficult choice in front of them. You see, if they stop printing money too soon, if they cut down on stimulus packages, etc., the economy may slide backwards and take a further negative turn. If they stop printing money too late, the economy might be okay, but the dollar will probably be pushed to the point of high inflation. And with economics as well, it's never as simple as just stopping at the right time because these things are so difficult to judge. So the question is, which one out of those two do we think they are more likely to lean towards? Are they more likely to favour stopping too soon and risk harming the economy, or stopping too late and risk harming the dollar? Well, in my opinion, I think the economy is the absolute priority, which means they'll probably favour stopping too late, if anything, and that means the dollar could be devalued through inflation. It is because I think that inflation is coming, and I'm less than confident about the economy that I've personally been bullish on gold, and we could make an argument that perhaps Buffett feels the same way. But again, my responsibility to you is really to present both sides of the coin and not just my personal opinion. And to tell you the truth, that's not the easiest here. I mean, the world's largest investor, who has been famously negative about gold his whole career, has just invested into a gold mining company. And this news comes out after I've been banging on about gold for months and months, and literally 3 of my previous 4 videos have concluded specifically with bullish words on just gold. So part of me just wants to say we have conclusive proof that Buffett is bullish on gold too, and end the video right here. Thank you for joining. But that's not right to do, so instead, let's consider for a second that Buffett and his company Berkshire Hathaway are sitting on around $146 billion in cash, or a cash convertible, earning a relatively low interest rate. The staggering amount of cash that he's holding could perhaps be taken as an indication that he's maybe not as bullish on the stock market as his words might indicate. Either way, he has billions of dollars in cash or cash convertibles, so he has to start thinking about how to protect that money. Sure, his main focus is picking great stocks, which means he'll be able to beat the market, but as that pile of cash grows, he obviously has to consider how to make sure that inflation doesn't gradually eat into it. And again, this is where gold usually comes in for most investors. But let's consider the size of Buffett's investments into Barrick Gold. In total, he invested $563 million. At the same time, he's holding over $140 billion in cash. If we took his investment into Barrick and divided it by his cash pile, it would give us a value of just 0.4%, or a ratio of 250 to 1. So there's no getting around the fact that Buffett's investment into gold is relatively small compared to the amount of money that he holds as cash. Although, then again, this is still the most bullish investment on gold that Buffett has made, so even if we must try to put things into perspective in terms of size, as gold investors, we can maybe also take a little bit of pleasure seeing one of the world's largest and most anti-gold investors give such a bullish signal for the precious metal. Now let's talk quickly about whether it's too late to buy gold or whether it's not. And then we'll talk about whether it makes most sense to simply buy gold itself, or if it's better to buy a gold mining company like Buffett has done, and then I'll share exactly what I've done with you. So I've recently released a video going into the details about why I'm still bullish on gold even after such an incredible 2020, and I'd really recommend you check it out after this. The link will be in the description too, but I'll highlight a few key points for you here. So we know why people buy gold. It's a protection against inflation, and it's an insurance policy in case of difficulty with the economy. Well, when you're looking at the next 3 to 5 years, let's say, whether you're bullish or not comes down to what you think is going to happen for these two things: inflation and the economy. Now, for me personally, I think the economy is going to take a lot longer to recover than many people believe. I think the idea that it will be a V-shaped recovery sounded great when it was mostly pushed, sounds less likely now, and really sounds good in the lead up to an election, but the data coming out to me just indicates that I don't think it's going to happen. And when I look at inflation, I don't see the Fed or just about any central bank worldwide cutting down on money printing to support the economy anytime soon. So when I look at these two factors, I think they both still play into gold. And as a result, when I consider the reasons why gold has increased in 2020, I think these reasons continue. As a result, I'm still bullish on the price because, again, I think the reasons to be bullish will continue forwards. On top of that, we're seeing quite a unique effect with the Fed printing so much money. Because they've pumped so much money into the market, some of this extra money has actually begun spilling over into other markets, such as commodities. In fact, we've recently been witnessing virtually all markets somehow rising simultaneously. Stocks, bonds, and commodities have all been climbing in recent months. So as I think that the Fed is going to continue printing money, I also think the money is going to continue spilling over from the stock market into other investments such as gold, particularly as investors become more fearful of buying the stock market at or near all-time highs. Now, the question of whether to buy gold or gold mining companies is a really interesting one. So the way that I tend to see it is that buying gold is like buying an investment with one layer. You buy gold, and if the price rises, your investment rises. If the price falls, your investment falls. Nice and simple. Buying a gold mining company, on the other hand, is like adding a second layer. You see, you still have that layer at the bottom, which is the price of gold, and that layer is going to heavily impact what happens to your investment into the company. But now that you've added a second layer on top, that's what the company does. For example, if the company are able to outperform their competitors, they'll be able to grow at a faster rate and will potentially increase in value even more than just buying gold by itself. With the value of fuel being as cheap as it is globally, this reduces the cost for all mining companies, allowing them to potentially be even more profitable. However, with this, there is the downside risk too. What happens if you invest in a mining company that is outperformed by its competitors? What happens if fuel prices rise and the profit margins of all mining companies simultaneously fall? What if the company collapses? You'd lose all your money. Well, holding gold, it might just sit there and return nothing. It's an unproductive asset, but at least it can't go bankrupt. So when you add a second layer, you're essentially increasing your potential reward, but you're also increasing your risk. So in my opinion, whether it makes more sense to look at gold or gold mining companies really comes down to two things. Number one, how much risk do you want to take on? If you're looking for higher risk and higher reward, then maybe adding a second layer could work. If you don't want added risk, buying gold by itself should be sufficient. And number two, are you able to research and understand companies well enough to be able to analyze that second layer? Now, if you're Warren Buffett, of course you can. That's where he excels. But if you're not working full-time in the investment arena, then it can be quite challenging. So for me personally, I already hold some high-risk investments such as cryptocurrency. So when I look at gold, I'm not really trying to add too much risk. I'm not trying to take on the highest risk possible. And as a result, for me, simply holding gold is enough. But of course, it's going to differ for everyone. That's just what works for me. I'm really just trying to outline so you can gauge what works best for you. Finally, when it comes to holding physical gold or buying an ETF, I personally hold my investments in an ETF as I'm invested through a government scheme, which allows me to increase my investments by 25%. I produced a whole video on the pros and cons of the two approaches though, because there are some serious trade-offs to both sides of things. So check it out by clicking up here now. If you've enjoyed this video, remember to smash the like button for the YouTube algorithm and subscribe for videos every Tuesday and Wednesday. And of course, just thank you for watching.